recent thing I had because it was my first ever buyer's handover. She was rejected a mortgage.
What basically banks are underwriting is the stability. As far as banks are concerned, there are four major charges.
Over there, you have to declare to the bank and the government that if you are buying the property for yourself, in which case a lot of things go down, and if you're buying for investment, they penalize you. So they increase the interest rates. Is that something we do here? Hi everyone, this is Nick, your friendly neighborhood property consultant, and I'm here with Mr. Rohit Shah, who's going to be helping us understand mortgages in the UAE. I know that everyone just blindly trusts me when I say you can get a mortgage over the phone, but I figured it would be a lot more convenient for you to watch this wherever you are and understand the nitty-gritties, and that's how we'll get into it. Mr. Rohit, would you like to introduce yourself to our investors from all across the globe, mainly UK, US, and Europe?
Yeah, hi Nikhil. Thank you for inviting me. My name is Rohit. I'm an Indian national. I'm in UAE from 2005 onwards, and since December 2007 till date, I'm selling mortgages in the country. I have been employed with a couple of banks from 2007 till December 2020. And from December 2020 onwards, I have started my kind of own mortgage broker setup. And I'm handling the mortgage sales with a small team and dealing with most of the banks in UAE. So,
Wait, did you actually work for banks here before?
yes,
All right. So first question for you: can they get a mortgage? Yes or no?
yes.
Okay, that's a wrap. All right. Okay. So basically, all of my buyers who have bought off plan a year ago, 2 years ago, 3 years ago, they would be coming over to you to apply for these mortgages. And I just thought we'll go over the basics just so they understand. This is part of my series of what I'm calling Investopedia, so that the basics I don't have to go over again and again over each call, and they can just watch this at their convenience. So I just want to start off by saying I think we met at a comedy show with one of my previous buyers 5-6 years ago, and yeah, we've been working together since then. I'd like to discuss start with a recent thing I had because it was my first ever buyer's handover a couple of years ago, and she tried to take a mortgage, and my first sale was actually a pretty low one. It was about 400,000 dirhams, and when she applied for a mortgage, she's a doctor based in Saudi. She was rejected a mortgage. So I wanted to ask, why do you think that is, and basically what's the minimum we need to apply for as a mortgage?
Nick, first and the foremost thing that UAE is a very vibrant country, and mortgages for non-residents are offered since a long time. So your client applications got rejected for what reason we don't know, but usually if things are in place, like client has perfect documentation,
Yeah. But
he's
she
working.
told me, they said that it was a minimum amount issue. So what's the minimum amount that they should keep in mind that they should apply for?
With various banks offering mortgages for non-resident clients, the minimum loan amount applicable is 250,000 dirhams for certain banks, and certain banks have like 350 as a minimum.
Okay. So just to translate that for people to do their calculations, if you're buying something worth 1,000,000 dirhams and the payment plan is 75-25, that means you're paying 75% of the property value, and the balance left over to get from the bank is 25%, which is 250,000, which will get rejected, like you said.
So some banks are offering a minimum 250. Some
Okay.
banks are offering a minimum is 350.
Okay.
So depending on which bank you are going with,
Yeah.
depends. If they don't have the threshold, they will
Yeah.
say no.
So let's say on a safer side, the way you think about this is that your payment plan should allow you to get a minimum of about 100,000 pounds, just to be on the safer side, yeah, which is about 460-70,000 dirhams. Is there a max?
As long as client is eligible, there is no max capacity as such.
Okay.
And if
You mean income is there?
yeah, if as long as client is eligible with the income, he can take a number of mortgages.
Okay.
And if not one bank, like I said, there are more players in the market, more banks which are offering. We can split in the banks and we can get the mortgages.
What about the LTV? For if you could just go over what the LTV is as well.
For non-resident, the comfortable LTV offered by the banks is 50%.
Okay. And that's the official max
that's
that
the
they
max.
can get. So that means if you've got a payment plan, LTV, by the way, is loan to value ratio, right? So if you're got a payment plan of about, let's say, 50-50, and it's a $1 million property, 500,000 at the end that you're supposed to pay on completion, you can speak to Mr. Rohit and get the mortgage sorted for that. But if your payment plan itself is 70-30, that means you can only avail 30% and you have to self-finance.
I would like to add something. If a
yeah.
client is willing to buy a ready property,
Uh-huh.
then he can also take 50% LTV and make a down payment of 50%.
Okay. Yeah. But in that case, you need to pay up 50% upfront plus commission plus stamp duty, everything all at once. And I do have some Muslims in the UK, Europe, etc. And when I was living there, I found out, speaking to multiple people, that Islamic mortgages over there are sort of something that private corporates do. It's not something that banks do there. Of course, it's the UK, for example, but they get surprised when they hear it's a very widely available, normal, regular thing here. So I just wanted you to go over Islamic mortgages, what they are, just briefly.
Yes, sir. As most of the banks offering mortgages here have Islamic products, but there are some banks which are Islamic banks only. So they have only Islamic products. So mortgages are available in both conventional and Islamic ways as well.
Okay. So if it's an Islamic bank, so they only offer Islamic mortgage. Okay.
Yes.
Okay. But there are other banks which are non-Islamic banks, but they also offer Islamic mortgages.
Absolutely correct.
Okay. And these are all Sharia compliant and international investors can also get this.
Yes, absolutely. International investors can avail for Islamic finance. Plus, the products offered by the bank, Islamic products offered by the bank, are approved by Sharia committee, and that's why how they are marketed.
Okay. And what are the sort of documents they need? This is where it gets confusing for them. That what is the UE bank going to check?
So documentation is pretty standard. So we generally have banks are categorizing client into two categories. Either you're working in a company, so you are a salaried, or you own a business, so you are a self-employed. So for salaried, standard documentation will be passport, local ID, salary certificate from the employer, bank statement 6 months reflecting the salary, bureau reports, tax reports, and details of your existing liabilities. These are the basic standard documents. And once bank will review, they need further clarification on any of the thing, they might ask for something.
By liabilities, you mean car loans and other mortgages that they have in the UK?
Any loan from bank or financial institution which client is liable to pay is considered as a liability, or even a credit card offered by the bank is considered as a liability.
Okay. I mean, their credit cards are very low limits compared to here, but okay. In self-employed, what do you need?
In self-employed, we need, again, same passport, local ID, trade license, memorandum, articles, share certificates, any other company legal documents, company bureau, company statements for 6 months, personal statement for 6 months.
What are you checking in the documents? What do you need?
What basically banks are underwriting is the stability.
Okay.
So when any bank or institutional in any part of the world, anyone lending the money, they want to see the party to their lending, how stable they are financially.
Yeah.
Because banks are mainly concerned with the repayment of the loan.
Yeah. I'm just talking numbers. Like, what's the minimum number they should prepare for? That if they're buying an off-plan property right now, after 3 years is the handover, what's the minimum number they should see for 3, 6, 9 months in their statements?
As a salaried employee, what banks are looking here is a minimum salary of 25,000 dirhams.
Okay.
For non-residents. And for self-employed, somewhere around 50,000 monthly income dirhams. In dirhams, it should be there.
So that's £5,500 roughly for employed people in the UK, about 6,000 euros in Europe, and self-employed, you said 50,000 dirhams monthly. It should be receivable.
Monthly income.
Income, okay, including everything. Okay.
Yeah.
So what about people who are just living off of rental income?
Only rental income, because rental income is very volatile.
Okay.
So banks are not very comfortable in advancing loans only on basis on the rental. Rentals can be added on your salary income or a business income.
Okay. Let's say their salary is about £4,000,
Okay.
which is about, let's say, as an example, 20,000 or 18,000, 19,000 dirhams. And they come in with their another rental income of, let's say, £3,000. So the total is £7,000, which is more than what you need. Is that okay?
That can be, yes, rental income can be added.
Okay. Okay. So what you're looking for is basically these two numbers in your statements. If they are owning the company that they're working in, you're going to be checking the personal as well as the business.
Yes.
So which one's numbers do they need to fix or have?
See, banks have offering different products and different evaluation methods. So we'll see once, once I get the documents, bank statements, I do the evaluation. So if company bank statement underwriting suffice the purpose, client is eligible based on that
Yeah.
statement, I will recommend we'll submit that. If with the personal statement, if client is eligible, we can submit with the personal statement.
Okay. No, in the assumption that the amount is not the problem, it's just that I think in the UK they don't take salaries as much as they do dividends out of that company. Is the dividends counted as income
So
then?
if it's a self-employed and he is drawing a management remuneration or a dividend into his personal account, then if personal account suffice the calculation to make him eligible, then we can.
You won't even go into the business one.
Yes.
Okay. Okay. All right. What are the costs that they're looking to see with the mortgage? Are you going to be charging them anything?
Not really. So I get paid by the bank on the successful completion of the transaction. But in terms of the charges and all, but apart from mortgage, if any other services are required, then yes,
Okay.
we do charge.
What about the mortgage cost itself?
Mortgage cost. So as far as banks are concerned, there are four major charges. So one is processing fees for non-residents, which is typically 1% of the loan amount, which is charged at the time of final approval.
Okay.
Some banks are charging for pre-approval upfront cost is 1,050 dirhams, which is adjusted in 1% at the later stage.
Okay.
Then there's the valuation fee, which is dirhams 3,150, 3,150,
Yeah.
which is charged at the time of valuation. Then there are two cost insurances. One is life insurance and another is property insurance,
Okay.
which typically comes around 0.5% of the loan amount every year.
Okay.
Some banks have here and there percentages, so
Yeah.
some can be higher, some can be lower.
Is that mandatory
That is mandatory.
to get property insurance and
And
life insurance?
Yes.
And that's each 0.5.
No,
No,
total, is, total is 0.5.
Okay. So just to make it easy, if you're buying, let's say, 440,000, 20,000 pound property, which is 2 million dirhams, and you're on a payment plan of, let's say, 60/40, which means 40% of that is about 800,000 dirhams, or in pounds, it would be 170, 175, something like that. On that 175,000 pounds, you're going to be charging 1% as processing fee, and then another 0.5% for the insurances, and about 700 pounds. No, not 700, 800 something. So 750 on the evaluation. Okay, and so let's assume that they should, in my opinion, they should speak to you 6 to 8 months in advance of the completion date, and they should get your opinion on their statements and see what can be worked out. And then what time do they come to you to get the actual mortgage? A month before handover, 2 months, 3 months? What is the actual time they need to start?
Yes, 1 month before the handover is the ideal time. What I tell my clients to submit the application for the approval. And once you have the handover, then we can start the rest of the proceedings immediately. Because pre-approval is generally some banks are offering for 30 days, some are offering for 60 days.
Uh-huh.
So depending on which bank we get the approval, so 1 month before is the ideal time.
What do you need from the developer? What document is needed from the property's point of?
From developer, in terms of property documents, we need SPA, Ukud, latest statement of account, and handover letter.
Okay. So the Ukud is something you get after signing the SPA, which comes after the 20% plus 4% stamp duty, and then that's it. And the SOA will something you can request the developer, and you said the handover letter, which is something they get about a month before the completion. and that's it. Then you'll start the process. And once they get the pre-approval, how long does it take, by the way? Let's say they give you all of these documents today now, and the handover is in a month. So how much time do you need?
So technically, in 3 to 4 months, normally it takes end-to-end time, unless there is some complication or bank asks for further verification of certain documents. But 3 to 4 weeks is a standard time from submitting the application to the disbursal.
To dispersal. Okay. Also, another question, one of my, because I asked everyone and they said, ask this. So they said, what if I want to pay early? Let's say they get the mortgage, they get the keys, the tenant is in. After 6 months, they get a big bonus check and they want to complete early. So what are the scenarios there?
So in partial payment, the standard clause is the client has to pay 1% of the amount that he's prepaying, or 10,000 dirhams, whichever is lower. Having said that, some banks are giving offer that every year 20, 25%, 15%, depending on the bank. So they are giving offer this percentage of amount you can pay every year without any charges.
Okay. So there's a max capping with some banks that if you pay this year, we won't charge you anything and your installments go down.
Installment goes down or tenure goes down, bank gives the option, so client can choose.
Okay. And when these people these people are used to a different concept in the UK. Okay. Over there, you have to declare to the bank and the government that if you are buying the property for yourself, in which case a lot of things go down, and if you're buying for investment, they penalize you. So they increase the interest rates. Is that something we do here?
Not really. But here, actually, banks are looking for. Banks are also asking whether property will be for investment use or for the self use. So usually self-use properties for resident banks are financing a higher percentage, and for
higher percentage for people who living in the property.
Yes.
Okay.
And if it's for investment, then LTV gets discounted.
Okay.
But for non-residents, anyway, the LTV is restricted to 50-60, so it does not 50%, so it does not make much difference.
What I usually tell them is that they're basically a safer bet for the bank because they're paying up so much more compared to us, for example, when we go for a property. Yeah, one more question I had, one of my other buyers had in the UK was, what sort of combinations are possible in terms of, let's say, someone wants to buy in the name of mom, dad, or father, son, or husband and wife, or two friends? Which ones are possible?
Only immediate family members, blood relatives are okay. Otherwise, friends, no. And like usually, if father and son are coming together, obviously father's age is more. So for to get the max tenure on the loan, father's age will be considered. So based on his age, like maximum banks are giving up to 65%, 65 years of.
Oh yeah, what is the tenure?
Maximum is 25 years, but your age should not cross 65 after 25 years.
Okay, so we can back calculate as...
yes.
Okay. So 65 minus 25.
So if father and son are coming together, so bank will consider father's age. And
as the max cap?
Yes, and based on his age, whatever tenure is left, they will approve that.
Okay, so friends aren't allowed. And for this, do they need to book the property in that name? Or let's say the son has taken it and he wants to apply with the father. In that case, can he just add in the father during the time of mortgage?
Yes, you can add. Even if the property is under single name, loan application can have two people.
And then you'll take the income of two people?
If it's required for the eligibility. If one income is enough for the eligibility, we'll take one.
So let's say father and daughter. That's possible, right?
That's possible.
Okay, so let's say father and daughter have... Neither of them have an income which is good enough for you to disperse the loan. But together they come in and they apply for the loan, they'll get it because you'll combine the income.
Yes.
Okay. So, and that's something they can think about at the time of completion in case, so that's also there. Another model that what I've seen people do here, and these people in the UK or Europe are doing that in their home countries as well. This thing I want to ask you about is remortgage, because a lot of the buying that happens in this country is cash buying, and they're basically paying everything up front and they're collecting the rents. But what if at some point, let's say, they don't want to sell because the prices are going up and they want to stay invested in the market and they're long-term investors. But what they want to do is get the equity out and put it into another property. Is that something you can do for internationals?
For international clients, this option is not available. But having said that, anyways, client wants the equity and to put it into another property, we can fund another property anyways if he's buying a
Okay.
direct
And
one.
you'll be using the income generated from this one property as well.
That rental income can be added into his income.
Okay. Okay. So that'll take his eligibility up. Um, what if they get the property visa from that first property and they come here and they're taking the rent in their local UAE bank account? Even then, you can't remortgage.
Yes, because major income is coming from home country. No?
Okay. And what if it's 4 or 5 properties now?
If 4-5 properties, then
And the income is like 400,000 dirhams.
if 4-5 properties are there and client is ready to mortgage all of them, then some banks are offering solution for that as well. But that is slightly
For internationals.
yes. But if he has 4-5 properties, he'll be having visa as well,
Yeah.
and then he's a resident.
And all the income is coming in locally into
Yes.
the local bank account. Then you can release equity from the existing properties.
Yes, yes.
Okay. So there is a way to get it out.
There's a way
Okay.
to get it. Yeah. If client has more than 3 properties rental income, and he's ready to mortgage all 3, then there's an option.
Is the number based on number of properties, or is the number based on just your initial number that you said 25,000 dirham monthly income?
No, then that is for non-resident. But when client has a visa and he is getting
Yeah.
income from 4-5 properties, then if more than 3 properties he has, the rental income is coming in, then there is an option.
Okay. And how much percentage would you release of equity?
40%.
40%. That's it. Okay. For internationals. What about me?
For internationals, again, that international client is a resident now, no?
Okay.
He
Okay.
has got the visa and he's getting 4-5 rental incomes in UAE.
Okay.
So then I'm not considering his overseas income, so it will be
So
considered.
even for me, I can't get more than 40% out of my property back.
Like I said, we need 3 properties minimum.
Okay. Okay. All right. Anything that you want to add that they should keep in mind? Obviously, I'll link your WhatsApp and your website in somewhere in the video below. But if anything else you want to advise them and say that prepare for this.
Just for the international clients, like I can understand some clients are more worried whether they can get or not. But like I said, UAE is a very vibrant country and offering their whatever they can. And mortgages are available since long time in the country for non-resident as well. So it's pretty easy. Just because like client is doing it for the first time, they might feel nervous, a lot of documentation or a lot longer process than UK maybe. But
No. UK is going to be a lot worse. Everything there is a lot worse.
but things are much easier here. Sometimes it might take time because of the non-resident documentation, underwriting and all. But things are much easier here.
Okay. But you said they need to provide their tax reports as well.
Yes.
But salaried people don't have tax reports. Their tax gets debited directly. I think all they have is an online portal with HMRC, which is their taxation department.
Yeah, so any report generated from that online portal will suffice.
Okay.
Like in India, we have, like I come from India, so in Indians, as an Indian, I have salaried people also file the tax, so they get the tax return report.
Okay.
And self-employed also, they have company tax return report separately and personal tax.
So their yearly report, that's whatever is generated from HMRC's portal, for example, and that's what you need to see.
Yes.
Also, one more question. So what if someone's income is pre-tax income falls above your criteria, but post-tax income doesn't? What are you trying to see there? Because tax report will say that he's making good amount of, to give you an example, someone making 120,000 pounds a year, which is about 550, 600,000 dirhams into 4.7. So they would get almost half of that in hand, okay, which is 7,000 roughly. So, what are you trying to see? Which income do you want to see?
Obviously, bank will see the net income
Post-tax.
which client is getting in hand, and if it falls below the threshold, then bank might say no to your application. But having said that, we can add some other family members' income.
Okay.
And
for business people, let's say there's in the 6 month statement, 1 month is far above what you need. and 1 month is far below. How are you?
So banks are calculating the average.
Okay.
So at least 5 months out of 6 should qualify for the threshold required.
Okay. Is there a minimum statement balance that they should maintain?
Yes. So if banks are considering personal bank statement for self-employed, so average balance calculation is being done. So like I said, for self-employed, 50,000 is required dirhams a minimum. So average balance and monthly incoming should be around 50,000 plus.
Okay. So that means about 11,000 pounds that they need to keep in their bank,
As an average
making no
balance.
interest, not growing at all. Okay. 11,000 pounds to keep in the bank, just to show you for the 6 months prior to completion. Okay. All right.
So average balance plus the incoming also should be there of similar amount, 11,000 pounds.
Okay. Also, there's some of my buyers asked this very weird questions because I have to explain that that's fraud. But they said, what if I come here, open up a company, employ myself, and start paying myself a salary from the UK, and then I can get 80% LTV?
No, sir, see, as long as you are, that is part of the system.
Yeah.
We are here. Anybody is welcome to come and open the company and company account and personal account and operate the business.
Yeah.
Either internationally or over here.
Yeah, but you can't come here and open up a company, pay yourself a salary from the UK, send it to your company, send it to your personal bank account, and then they could.
So usually self-employed, that's how they do. They withdraw money from the business account.
Yeah.
So if you are withdrawing your business,
But the business is not making any income. It's
Sorry?
coming in. The business is not making any income. It's coming in from the UK, let's say, capital investment.
so then how the money will come regularly if there is no business income?
Yeah, so that's what I was trying to explain to a lot of people. Just because they want the higher LTV doesn't mean you come here and start opening a business and
So anyways, new business banks are not
giving it anyway.
Anyways, so at least 3 years should be
3 years of
2 to 3 years should be there. But having said that, there are products available new to country business. Some banks are offering the products based on again 6 months bank statement personal, and again their LTV is restricted to 50% for them as well.
Okay. All right. Thank you for coming. This was wonderful. I think this would help a lot of my UK buyers understand how easy it is or how difficult it is. And if they want to reach out to you for more questions, all the links are below. Mr. Rohit, happy to help. I know it's not going to be an immediate mortgage for you. It's going to be 3 years later or 2 years later or 6 months later because they're all buying off plan. Thank you for coming.
Thank you, Nick. Thank you for coming me, and to all the international clients of Nick, I am there to answer your questions to the best of my ability. My WhatsApp number and email both are given, so feel free to contact me anytime.
All right. Thank you.
Thank you.
Yeah.